Module 8, Direct Material and Labor.
So good day everyone, I'm Christina Clemente reporting the objective of cost accounting system. So as you can read, this is the cost accounting system, and it means that it helps to determine and estimate the cost of producing a good products or services. So sa control of cost, that means the process of locating, getting rid of, or cutting back unnecessary expenses to increase the profits. So it's all about budgeting. For example, improving the product quality to reduce repairing or rework. That means mas patataasin yung quality during production para maiwasan yung repairing at maiwasan yung expenses from repairing the products. So, planning and performance measurement. Closely related to cost control is the use of cost data for effective planning and performance measurements. So that means using performance measurement, companies may discover their strengths and weaknesses, also areas where should improvements do or add. Because performance measures gives information necessary to make future sure decisions. So in price setting, materials and labor typically are large components of the cost of a product and so form a bottom limit below which prices should not be dropped. So meaning, in price setting, kinoconsider dito yung production cost, raw material cost, and labor pag nagsaset ka na ng price sa final product. And sa inventory valuation, it is a prerequisite to an accurate determination of the cost of goods sold in the statement of income and expenses. So, meaning, nabanggit yung income and expenses, meaning it is a method of accounting used by businesses to determine the worth of unsold inventory items when preparing a financial statement. It has an impact on a company's profitability and potential worth as presented in the financial statement. So, these are the role of the controller. Meaning, cost controller controls project expenses. The duties of a cost controller including creating, managing, planning, and predicting the project's budget. They make sure that projects are finished within authorized budget and try to avoid anomalies or errors. So, now, proceed to just-in-time or JIT, meaning it is a type of inventory management wherein supplies are only received or supplied as needed, reduce inventory holding costs, and higher inventory turnover are the major goals of JIT. So, meaning ng JIT or just-in-time is magsusupply lang sila or matatanggap nyo lang yung supplies if only needed, kung kailan nyo lang kailangan. So, now, the controller can also investigate non-value-added production activities. Non-value-added production, meaning customer is not willing to pay for. So, these are the activities. And now, proceed to under JIT. So, first is machine efficiency, meaning it is the capability of machines to convert inputs to output efficiently without waste. Meaning inputs, raw materials to outputs, finished product efficiently without waste or less expenses. Next is purchase price variances. It is between the standard price or estimated price and actual price so company can keep their profit margin higher. Next is headcount. So that means simply the number of people who work in an organization at a particular time or simply employee tracking. So next is scrap factor. meaning it is the quantity of products that businesses generate that are raised as a result of manufacturing or production errors or problems. Next is labor variances, meaning it happens when the predicted or budgeted quantity of labor cost is either lower than planned or more than estimated. Next is standard cost overhead absorption, meaning it is a managerial accounting technique for recording all expenses related to producing a specific product. So now, let's proceed to type of cost system. Number 1 is traditional costing system, meaning this is a technique allocates cost in accordance with the volume of resources used in product manufacturing. Number 2, process of cost system. Process of cost system. It is assumed that the price of each produced good is equal to the price of every other good.
Measuring direct material costs. When we say measuring, it is about the process of determining how large or small a physical quantity is. In this topic, it tends to measure the costing of a direct material. The term direct material refers to material that can be definitely or specifically charged to a particular product, process, or job, and that becomes a component part of the finished product. The definition must be applied in a practical way, for if the material cannot be conveniently charged as direct or if it is an insignificant item of cost, it probably would be classified as indirect material and allocated with other manufacturing expenses to the product on some logical basis. Direct material also should include the cost of packing supplies necessary to deliver the goods to the customer, as well as any normal losses due to scrap, evaporation, spoilage, or shrinkage. Excessive amounts of scrap should be expensed or charged to the overhead account. The extent of material planning and control is broad and should cover many areas such as plans and specifications, purchasing, receiving and handling, inventories, usage, scrap, waste, and salvage. Proper planning and control of materials with the related adequate accounting has advantages in that it reduces inefficient use or waste of materials, reduces production delays by reason of lack of materials, reduces the risk from theft or fraud, reduces the investment in inventories, reduces the required investment in storage facilities, provides more accurate interim financial statements, assists buyers through a better coordinated buying program, provides a basis for proper product pricing, provides more accurate inventory values. Controlling direct material costs. Direct material costs include the invoice price for the direct material, the inbound freight costs, sales taxes and duties, cost of delivery pallets or other freight containers. Control in its simplest form involves the comparison of actual performance with a measuring stick, standard performance, and the prompt rectification of adverse trends. The central theme, however, is still the use of standard as a point of measurement, although the application of controls will vary in different firms. Some of the considerations that must be handled by the controller are described in the next sections. Purchasing and receiving. Establishment and maintenance of internal checks to ensure the materials paid for are received and used for the purposes intended. Audit of purchasing procedure with a large number of small quantity receipt. Audit of purchasing procedure to ascertain that bids are received where applicable. comparative studies of prices paid for commodities with industry prices or indexes. Measurement of price trends on raw materials. Determination of price variance on current purchases through comparison of actual and standard costs. Material usage. Comparison of actual and standard quantities used in production. Preparation of standard cost formulas to emphasize major cost items and as a part of a cost reduction program. Preparation of reports on spoilage, scrap, and waste compared with standard. Calculation of cost to make versus cost to buy. This list suggests only some of the methods available to the controller in dealing with material cost control.
Controlling direct materials quantity and measuring direct labor costs. The controlling direct materials quantity is refers to the variance that arises from the difference in the expected in actual quantity of materials used in productions. Standards of material usage may be established by at least three procedures. First is by engineering studies to determine the best kind and quality of material taking into account of the product design, equipment, and production methods. By engineering studies, sila yung in charge to determine of what kind of product that needed in the procedure method. And number two, by an analysis of past experience for the same of similar operations. Let's say from the quotes, experience is the best teachers. Day by day, na-analyze mo yung wrong and right on the procedure methods or namamaster mo kung ilang materials lang yung needed sa procedure methods without any measuring. And number 3, by making test runs under controlled conditions. Ito yung trial or error or experimental to make your product perfect or complete. The factors that will influence the controller in applying control procedures to material usage are: the first is the production method in use. The controller know the right procedures, even the cost, expenses, quantity of the product in the procedure methods. And the second is the type and value of the materials. The more value is the more high standard that need in the procedure method for the controller procedures to material usage. Like for example is the jewelry made from gold. So the gold is so expensive. That's why the procedure method have a high standard of controlling. Number 3 is the degree to which cost reports are utilized by management for cost control purposes. Measuring direct labor costs. Direct labor cost is a part of wage bill or payroll that can be specifically and consistently assigned to or associated with the manufacture of a product, a particular work order, or of a provision of a service. The objective of labor counting are twofold. First is a prompt and accurate determination of wages due to employee. Ito yung right or accurate wages na natatanggap ng isang employee. For example is, today the minimum wage is 570, am I right? Is under the law of the government. Number 2 is the analysis and determination of labor costs in such a manner as may be needed by management. For example, by product, operation, department, or category of labor for planning and control purposes. It depends of what positions you are in the production methods. Or even you have a high sales or high input that made in the procedure methods. Nowhere is the advent of JIT manufacturing or just-in-time manufacturing system has called into question the need for reporting the direct labor utilization variance. The variance revolves around the amount of the procedure that is produced with a given amount of labor.
Direct labor cost is wages that are incurred in order to produce goods or provide services to customers. The total amount of direct labor cost is much more than wages paid. It also includes the payroll taxes associated with those wages, plus the cost of company paid medical insurance, life insurance, workers' compensation insurance, any company match pension contributions, and other company benefits. Direct labor costs are most commonly associated with products in a job costing environment, where the production staff is expected to record the time they spend working on various jobs. This can be a substantial core if employees work on a multitude of different products. In the service industry such as auditing, tax preparation, and consulting, employees are expected to track their hours by job so their employer can bill customers based on the direct labor hours they work. These are also considered to be direct labor costs. In a process costing environment where the same product is created in a very large quantities, direct labor cost is included in a general pool of conversion costs, which are then allocated equally to all of the products manufactured. A strong case can be made in some production environments that direct labor does not really exist and should be categorized as indirect labor because production employees will not be sent home and therefore not be paid if one less unit of product is manufactured. Instead, direct labor hours tend to be incurred at the same steady rate, irrespective of production volume levels, and so should be considered part of the general overhead cost associated with a running production operation. The governing criteria in assigning a cost to either direct labor or overhead is that a labor cost component should be assigned to direct labor if the cost is incurred because the company uses direct labor to produce a service, product, or project. In other words, most employee benefits will not be incurred unless direct labor is performed, and therefore those costs must fall into direct labor. Typical employee benefit costs that fall into this category are: in controlling direct labor costs, as with the most manufacturing costs, the ultimate responsibility must rest with the line supervision. Yet line supervisor must be given assistance in measuring performance, and certain other policing and restraining function must be exercised. Here lie the primary duties of the controller's organization. Among the means at the disposal of the chief accounting executive in labor control are the following: furnish other supplementary labor reports such as: generally speaking, labor rates paid by a company are determined by external factors. The rate standard used is usually that normal paid for the job or classification as set by collective bargaining. If standards are set under this policy, no significant variances should develop because of base rates paid. Some rate variances, however, may be created and are controllable by management. Some of these reasons which should be set out of corrective action include: what is incentive wage plans? Incentive wage plans are extra wages in the form of monetary and non-monetary ways for increasing the efficiency of employees and workers. It is also known as bonus to workers. Any action program which induces workers to produce more is described as incentive, and the remuneration paid for increased output is known as incentive wage. As such, the output-based system is broad or general type of incentive plan. However, an efficient plan must provide for minimum guaranteed wage based on hourly rate and extra remuneration for increased output. In other words, an incentive plan must include in its purview the characteristic of time-based and output-based system of wage payment. There are a large number of such plans that are applied in industrial concern these days. However, before these different types of plans are discussed, the various requirements of a sound wage incentive system must be noted. Wage incentive, also called payment by results, is anything that attracts the worker and motivates him to work. It determines their standard of living and their attitude towards the company. Incentive schemes provide payment based on either individual output or group output. The use of incentive assumes that people's attracts are related to their skills and ability to achieve important goals. What is target costing? Target costing is a system under which a company plans in advance for the price points, product costs, and margins that it wants to achieve for a new product. If it cannot manufacture the product at these planned levels, then it cancels the design project entirely. With target costing, a management team has a powerful tool for continually monitoring products from the moment they enter the design phase and onwards throughout their product life cycles. It is considered one of the most important tools for achieving consistent profitability in a manufacturing environment. Target costing is an excellent tool for planning a suite of products that have high levels of profitability. This is opposed to the much more common approach of creating a product that is based on the engineering department's view of what the product should be like, and then struggling with the costs that are too high in comparison to the market price. Target costing is most applicable to the companies that compete by continually issuing a stream of new or upgraded products into the marketplace, such as consumer goods. For them, target costing is a key survival tool. Conversely, target costing is less necessary for those companies that have a small number of legacy products that require minimal updates and for which long-term profitability is most closely associated with market penetration and geographical coverage, such as soft drink. The target costing concept has limited application in a service business where labor compromises the primary cost.